Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another income pick. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with risk. No matter how safe an investment sounds, there are risks involved. To read more about it, please see the description below. And if you want to read more about what John writes on a regular basis, you could head directly to www.incomeinvestors.com. While you're there, you could also sign up for some free reports that we offer to our readers, and they get delivered to your inbox. Oil and natural gas are getting a boost from strong demand, geopolitical uncertainty, and approaching winter heating season. While oil and gas prices can be unpredictable over the long run, one way to beat the volatility in the market is with midstream stock like Antero Midstream Corp, traded on New York Stock Exchange under symbol AM. Why is that? Midstream companies are the toll keepers to upstream providers. Upstream companies explore, drill, and extract oil and gas, and they need to access infrastructure or midstream companies to move their products to the market. This helps provide companies like Antero Midstream with reliable, predictable cash flow with built-in rent escalators. John?
Thanks, Mo. Yeah, Antero Midstream owns and operates energy assets servicing gas production into the lowest cost natural gas and natural gas liquid basins in North America. This includes the Marcellus Shale and the Utica Shale, and both are found in the Appalachia regions of Pennsylvania, Ohio, and West Virginia. Now, the Marcellus Shale is an unconventional reservoir that produces natural gas liquids, and oil, and is the largest and most prolific, actually, unconventional natural gas reservoir in the U.S. And it's responsible for producing roughly 35% of total U.S. natural gas supply. And its current inventory is in excess of something like 20 years. Antero operates actually through two segments: natural gas gathering and processing, and two, water handling. The gathering and processing segment is made up of a network of gathering pipelines and compressor stations that collects and processes production from Antero Resources wells in West Virginia and Ohio. Its fresh water pipeline and storage facilities support the operations for Antero Resources in the Marcellus and Utica Shale. Now, thanks to the company's long-term fixed service agreements, Antero Midstream has a pretty steady and reliable revenue stream and predictable cash flow. This allows it to provide shareholders with a safe, ultra-high yield dividend, and it also provides management with enough liquidity to safely expand its operations.
And on the financial front, Antero delivered its fourth consecutive quarter of free cash flow after dividends.
Yeah, Antero announced another strong quarter of results, and that included second quarter revenue increasing 27.7% year over year to $258 million. Net income was up 6% at $87 million or 18 cents per share. Then just a few other numbers. Adjusted net income was up 10% at $105 million or 22 cents per share. Adjusted EBITDA also advanced 10%, but it was up to $243 million. And as we're saying, free cash flow before dividends grew 31% to $139 million, while free cash flow after dividends was $31 million. Now that compares with a $2 million loss in the same period last year. And this was actually the fourth straight quarter in which Antero has reported free cash flow after dividends.
And John, let's talk about how are things looking for this company for the rest of the year?
Well, in the first quarter, Antero actually raised its full year guidance currently, and it's maintained that outlook. So right now, it currently expects to report net income in the range of $355 million to $395 million, and that's about 15% higher than previous guidance. Adjusted net income of $410 million to $450 million. That's a 15% from previous guidance. It expects the free cash flow, streak to continue, with free cash flow before dividends of between $550 million and $590 million. And free cash flow growth after dividends of $125 million to $155 million. It also expects to distribute total dividends of $430 million.
Now let's talk about its ultra high yield dividend. What's happening? What kind of payments would investors get?
Again, thanks to the strong cash flow generation, Antero was able to provide one of the most reliable frothy dividends in the industry. In October, the company's board declared a quarterly cash dividend of 0.225 cents per share or 90 cents on an annual basis for a current yield of 7.22%. That's almost double the current inflation rate, which is 3.7%. Now, that high yield dividend is not a fluke or result of a tanking share price. Antero actually has a long history of providing an ultra high yield dividend with a trailing annual dividend yield of 7.13% and a 5-year average dividend yield of frothy 12.58%. Its payout fluctuates, but thanks to its strong cash flow generation, it is well positioned to increase its dividend over the coming quarters. Since going public in 2017, the company has transitioned from outspend to a consistent free cash flow. And starting in 2024, management said it will take another look at actually increasing its dividend. Again, Antero's dividend is not high because of a low share price. Its payout is robust even when it's trading at record levels. On October 17th, Antero hit a new record intraday high of $12.74. And it's currently trading up around 8% over the last month, 25% year to date, 35% year over year, and it's actually up almost 20% since we last looked at Antero back in May.
John, thank you so much for your analysis. Just to recap, Antero Midstream is an oil and gas company firing on all cylinders. It has multi-decade underlying inventory, a strong balance sheet, and organic strategy that provides it with consistent and repeatable cash flow generation. This also helps support its peer-leading returns on invested capital and support increasing return of capital to shareholders. The outlook for this company remains robust, with management increasing its guidance in the first quarter of this year and saying it is well on its way to achieving its 2023 goals. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.